I actually thought about it, Gautam, yesterday when I made a request that a really good time to get you would have been at 15,200. Be that as it may, let's talk about it now. We've a bit of a water has flown under the bridge. We've digested some bit of bad news about 10,000, 1,100 points rally. Where do we go from here?
Yes, Neeraj. Well, if you had me at 15,200, I'm human. I would have gone with the sentiment and maybe talked pessimistic at that point of time. But if you had me in a closed room, not talking with people, I just thought that at the recent close, the market sentiment was extremely weak. The breadth was extremely weak. And I think with what has happened in the last a few weeks, this is a classical example of the markets climbing a wall of worry. I mean, if I were to just digress a little bit from the charts, which is my forte, talks about recession, inflation, interest rates, the possible COVID surge, geopolitical risk, FI positioning on the cash side, on the FNO side. There's just too many factors, oil prices and USD INR and the dollar index. I've just given you 10 factors which sort of indicated that the markets cannot rally. And here we are, gone up 1,000 points in a matter of 2.5 weeks. I think this beautifully once again tells you that everything that's happening in the markets today is very fast. The market is discounting things very fast, and gone are the days where it takes weeks and months, for things to be discounted. I think there was no point panicking a few days back or few weeks back when we were around 15,500, because let's not forget the bear market was almost 9 months, and the average drawdown on the NSE 500 was 43%. Now that's a phenomenal number, and even if you look at the breadth studies, only 13% of the NSE 500 stocks were trading above the 200-day moving average. The reason I highlight these two factors is because these were the factors which told us that it's getting overdone and the market is due for a recovery which has taken place. Now the big question is, can we build up from here? I've liked the way the markets have set up. The texture is good. The participation is great. Quality is doing well. India VIX lost 5% yesterday. And there are new leaders emerging. When have you seen FMCG and auto lead the market recovery? It's just not happened. So I think it looks good. Our working target was about 16,180, which has been done today. I think if we were to get past this number on a closing basis, then another 3-4-5% up to 16,600, 800 opens up. But I do believe that this is a market where you have to have a bottoms-up approach. You can't look at it top-down. There are just too many headwinds that will not allow the Nifty to get into the kind of bull market that we saw in 2020 and 2021. So stay stock-specific, stay sector-specific. This recovery looks very different to the earlier recoveries, that got sold into and then we went on to make new lows. It's unlikely that we'll do that this time.